Welcome to This Explainer. Today, we're diving straight into a high-stakes corporate survival story. Imagine for a second trying to steer one of the largest companies on the planet through massive, unpredictable, and just nonstop global chaos. Well, that's the everyday reality for energy giants. They operate in a world where a single geopolitical event or a sudden technological breakthrough can literally turn their entire business model completely upside down overnight. So we're going to look really closely at how one company in particular, Shell, built a strategic capability to navigate this madness. They actually stopped trying to guess what was going to happen and shifted to intelligently preparing for multiple, drastically different futures. Which brings us right to the ultimate strategic dilemma, doesn't it? How do you prepare for a future you simply cannot predict? For a global energy giant like Shell, the future is never stable. It's just not. The extreme volatility of the global energy sector is honestly like fighting an unbeatable monster. You just can't operate in this space if you're relying on a simple, predictable market where supply, demand, and pricing all nicely line up. Traditional business planning tools, they completely break down when the very ground beneath your industry is constantly shifting. Okay, let's dive into this because Shell faces uncertainty from almost every conceivable direction. These are the relentless forces of global chaos. I mean, you have oil prices that soar and then absolutely crash. You have sudden geopolitical conflicts where wars, sanctions, and political instability can tear apart global supply chains in a matter of hours. And then you factor in shifting climate policies, governments changing the rules, imposing carbon taxes, restricting fossil fuels. Add to that disruptive technologies, right? Electric vehicles, battery storage, hydrogen, carbon capture. These all threaten old, established business models, all while everyday consumers are actively demanding cleaner energy. When you put all of that together, these chaotic forces make traditional prediction completely impossible. So how do they actually survive? Well, Shell became famous for developing a secret weapon. They essentially threw their hands up and stopped trying to guess exactly what would happen. Instead, they adopted this radical new framework called scenario planning. They realized something crucial. In highly uncertain environments, the biggest risk isn't actually being wrong about a prediction. No, the biggest risk is being prepared for only one version of the future. Scenario planning became the tool that helped them think entirely differently from most of their competitors. To truly grasp how big of a shift this is, we have to contrast these two mindsets. Forecasting is what most companies do. It tries to predict one likely future, like here are next year's exact sales or oil prices or demand levels. But relying on a single forecast in a chaotic world, that is a dangerous trap. It creates this false sense of confidence and total strategic tunnel vision. Scenario planning, on the other hand, does something entirely different. It creates several plausible futures. It's kind of like exploring parallel universes. It asks what the world would look like under each distinct scenario, what risks would suddenly emerge, what opportunities would appear out of nowhere, and which decisions actually make sense across multiple different futures. Now, what's really interesting about this is that it requires a profound shift in the core question being asked in the boardroom. Instead of stubbornly asking what will happen next, Shell asks what could happen next and how would we respond? This philosophy is so incredibly powerful because it exposes outdated, frankly dangerous assumptions before the market actually does it for them. Companies often fail not because they lack information, but because they interpret new information through old assumptions, like assuming today's customers, regulations, and tech will just remain exactly the same forever. The real strength of scenario planning lies in fully exploring this multiverse of what if. Just think about the sheer urgency of these questions. What if oil prices just collapse? What if strict climate policies are rapidly introduced by governments worldwide? What if electric vehicles dominate way sooner than anyone expects? What if energy security suddenly supersedes decarbonization on the world stage? Or what if demand shifts entirely to emerging economies? By firing off these massive, high-stakes questions, leaders are forced right out of their comfort zones. They're forced to imagine worlds where their current revenue streams and long-held beliefs simply don't work anymore. And why is this kind of expansive thinking so absolutely critical? 2 words: billions of dollars. The stakes involved here are just astronomical. In the energy sector, decisions require massive long-term capital investment. Building refineries, deep-water pipelines, offshore platforms, or huge new low-carbon infrastructure, that involves sinking billions of dollars into projects that take decades to even plan and operate. A decision made today has to survive 20 or 30 years of pure unpredictability. You simply cannot base investments of that scale on short-term market data or one fragile little forecast. And this brilliantly illustrates how scenario planning actually works in practice. To upgrade those billion-dollar decisions, it's a really clear 4-step methodology. Step 1, it improves strategic awareness. Leaders become hyper-alert to early signals of change, like, say, closely monitoring policy developments if a specific scenario suggests stricter climate regulations are on the horizon. Step 2. It manages risk by brutally exposing which investments look profitable in one scenario but are incredibly vulnerable in another. Step 3. It creates strategic flexibility. Instead of locking into one rigid do-or-die plan, a company can build options, like investing in traditional energy while simultaneously building up capabilities in renewables or hydrogen. And finally, step 4, it elevates leadership conversations. It gives executives a shared language to deeply discuss uncertainty and actually build resilience into the DNA of the company. Let's move to part 1 and see how this builds into the ultimate boss fight, the energy transition. Now, this transition is the incredibly complex global shift away from high-carbon energy systems toward cleaner, lower-carbon alternatives. And for an energy giant, let's be clear, this isn't just a bump in the road. It is an existential strategic challenge. Scenario planning becomes absolutely essential here because Shell is forced to manage what we can call a dual reality dilemma. On one hand, oil and gas remain completely central to the global economy right now, and serving that existing demand is highly, highly profitable. On the other hand, there is massive increasing pressure from governments, investors, and communities to decarbonize. They have to prepare for a completely transformed low-carbon future. They can't just pick one reality and happily ignore the other. They literally have to manage the extreme tension between these two competing realities at the exact same time. To actually manage that tension, they have to look at several incredibly different yet totally plausible futures. In one reality, fossil fuels remain dominant for much longer, simply because developing economies desperately need affordable energy to grow. In a competing reality, rapid tech breakthroughs and intense policy pressure accelerate the adoption of clean energy way faster than anyone anticipated. In yet a third, distinct reality, geopolitical energy security concerns entirely reshape global investment priorities, pushing countries to secure their own energy independence at absolutely all costs. The strategic imperative for Shell here isn't to somehow guess which story will win. It's to ensure the company's strategy remains robust and credible across all three of these totally different futures. But we have to be honest, this tool isn't magic. It has very real pitfalls. It completely fails if leaders remain too emotionally attached to existing, highly profitable business models. They might intellectually imagine disruption, but fail to actually act on it when it counts. It also fails if these scenarios just become abstract reports or pretty presentations that sit on a shelf, rather than real action plans tied to massive investment decisions. It requires a brutal willingness to face uncomfortable truths, like the rapid decline of your traditional, reliable demand. And finally, if you fail to continuously update your scenarios as the fast-moving world changes, well, your preparations are going to be completely outdated anyway. So, the crucial point is, we can actually distill Shell's entire journey here into a clear, actionable survival playbook that literally any organization can use. First, do not rely on one forecast. It just creates false confidence. Second, identify your critical uncertainties. What external changes could completely break your business overnight? Third, intensely challenge your strategic assumptions about what you firmly believe will remain true. Fourth, build a flexible strategy that remains strong across multiple possible futures, not just the one you hope happens. And fifth, actually use these scenarios to make real decisions on resource allocation and risk management, not just to generate interesting reports. And as we broaden the scope a bit here, we see the universal applications of this strategic weapon. It goes far beyond just big oil and gas, and the stakes for your industry are likely just as high. Think about it. Universities can use this to navigate AI disruption, shifting student demand, and changing funding models. Retailers can use it to survive wild inflation, supply chain chaos, and permanent shifts in digital consumer behavior. Tech firms absolutely must plan for sudden government regulation, extreme cybersecurity threats, or total platform disruption. Healthcare systems can use scenario planning to prepare for population aging, public funding changes, and severe workforce shortages. Basically, if your industry faces chaos, and let's be real, whose doesn't right now, this survival playbook applies directly to you. The organizations that actually succeed in uncertain times aren't the ones that somehow predict the future perfectly. They are the ones that prepare for it intelligently. Because uncertainty isn't the exception anymore, it's the environment in which strategy actually happens. So I want to leave you with this. If the future is a range of possibilities, which version are you leaving your organization entirely unprepared for? It might be time to seriously evaluate your strategic blind spots. Thanks so much for joining me on this explainer, and keep questioning the future.